Here, market opens right here, and we pop up our 5-minute time frames at the market open, and our 30-minute time frames are here, and here is our 15, and here's our 2. So on the 2-hour time frame, on the largest one, not the most important, but the largest, we're going down right when the market opens. Right here, this purple line, right when the market opens, we're going down already. We got this downward momentum. The 30-minute chart is also, it has a downward momentum right when the market opens. Same with the 30-minute extended. So that's a clear direction right off the start of the market. That's a blessing. That's like easy mode. You could call it easy mode. And then the 5-minute regular hours, not extended. We open with residual buying momentum, and it starts to taper off right when the market opens. And we want to wait until we have a crossover. We want to wait until this flips from buying to selling to take a trade. And let's get to the market. Let's see what happens. So the market opens, and our entry criteria is a power volume bar that's aligned with the time frames, that's aligned with the histogram movement, and that's the entry, is a power volume bar, which is a volume bar that's higher than the previous 3 volume bars, that is aligned with the trade. So the market opens. The market opens here, and we come up, watch the 2-minute histogram, because we know we have a downward momentum, right? So we're waiting for this to go to the downside. So it starts to flip right here. Look, these next candles starts to flip to the downside right here. We're going down. We're still waiting for the 5-minute to align by crossing over, so we need this to finish. We can take the trade early, but it's a little bit more risky, like this one right here. This is the first scenario where my strategy triggered. So what happens on this candle? On this candle, when this candle finishes, it's a power volume bar right here, a volume bar greater than the previous 3. That's aligned with the downward momentum that we're trying to trade with. So we take the trade, we enter right here at the close of this candle, and we target a 1-to-1 ratio normally. In a 1-to-1 ratio, the full body of the candle can be considered, that's the 1, that's the risk you're allowed to go, maybe a little bit higher. So the 1-to-1 ratio would be 1 unit to the downside, which is here. So this was a win. Now we're going on to the next. Keeps unfolding. And if you had runners, by the way, these runners would continue to run and capture, a lot of money. But we're assuming we're not using runners. We're just going in and out, taking wins and losses. Okay, so we continue on. We're still on the right side of this histogram movement on the 2-minute. And then look what happens here. We get a volume bar greater than the previous 3 that's aligned with the trade. It's a power volume bar. These are all aligned. We're going down, down, down. This is another trade. Target a 1-to-1 ratio. The stop loss would be right above the candle, right about here. This is where we would exit the trade. This is where we entered the trade. So we want a 1-to-1 ratio, which means right here. That's a win. Next setup happens, number 3, right here. Look, still on the right side of the MACD histogram. We get a power volume bar. This one almost beats us. We almost lose, because look, it almost creeps up to our stop loss, but it doesn't. It continues in the correct direction, and we get a win. That's trade number 3. Keep going. This histogram has not really turned around yet. It's still technically going. And look what happens here. The very final stop for it before it turns around, we get a power volume bar. So these 2 candles, we would want to take, this is where our exit is, this is where our entry is right here. We want to take a 1-to-1, which is right about here. We get that. You don't have to take exactly a 1-to-1. You can take a little bit less and quicker profit if you'd like. Sometimes it's you'll find that with your discretion, taking a little bit less profit is actually okay. In most cases, it's not, but there's a lot of cases where it is. So this was the 4th occurrence of the strategy. The market's only been open for an hour and a half, and we've just made a lot of money. So now the market continues onward, and look what happens. We are not aligned anymore with the 5-minute MACD histogram. This is going against the trade, right? We're trying to go down, downward momentum. This is going up. That's not good. We want that to turn back around if we're going to take a trade. So the day goes on. We're still going up. Keep your eyes right here. We sort of come down here. We sort of do. And we even get a power volume bar right here saying, hey, take this trade to the downside. But this hasn't finished yet. This flip to the downside has not finished yet. This would have been a high risk trade. Yes, you could take it. Yes, you could take micro profits and win. But otherwise it's going to be a loss. And so how would you know to avoid this? Well, this 2-minute MACD histogram movement here is kind of sketchy. Look at this flatness. Look at this. It's one warning sign to maybe avoid it, because we want things to be more clean and obvious. And then the other thing to keep in mind is this histogram has not finished yet. This is going up. This is telling you I'm going up. Yeah, it might be having some resistance, but it hasn't finished yet. So that's the main reason. That's the main lesson I wanted to reiterate to you. You want to wait for things to finish to be safe. So we don't take the trade, we avoid it. Now this is going up all the way. You'll notice there's a lot of power volume bars, a lot of trades you could be taking, but we don't take them because that's not the strategy. But they're out there, and you can do your own due diligence and research and see what you like the most. Okay, look what's happening to the 30. The 30-minute, which is the most important filter, is starting to actually flip. It's starting to flip to the upside. And if we get this green bar to finish right here, that means we've officially flipped to the upside. And look what happens right around here. Right here, it flips. So now we're officially to the upside now. 30-minute is not aligned with the 2-hour anymore. That's not a big deal, because the 30-minute is the most important. So now that we're aligned to the upside, we're looking for upward momentum to the upside on the 5-minute. To take the trade, we want the 30 to be aligned with the 5, and then once that happens, we make sure the 2 is aligned. We wait for a power volume bar, and that's our entry, okay? Wait, before we miss, this was the last one right here, look. This was number 5, the 5th occurrence of the day. We're still in negative territory right here on the 30. The 5-minute is coming down right here, hasn't finished yet. It's a little bit more risky trade, but we've been coming down. Downward momentum, going to the downside with the 2-hour, with the 30-minute, and look what happens here. We're going to the downside on the 2-minute histogram. We get a power volume bar. Boom. This is a win. Your entry would be right here. This is your entry level. Your exit would be above the entry candle, a little bit above the entry candle. And you want to target a 1-to-1. But this isn't a win because look, the 1-to-1 never hits. It's too far away. So it's only a win if you take smaller profit. A 2-to-1 risk instead of a 1-to-1 risk. A 2-to-1 risk. Why would we take a 2-to-1 risk here? Well, the 30-minute is weak because yes, we're going to the downside, but look at the MACD histogram, it's going up. Okay, so that's a weakness. Anytime there's weakness, that means we want to decrease our profit targets. We want to take profit quicker. We want to protect faster. We want to tighten everything up. Okay, so that's one sign of weakness. 30-minute MACD histogram is not going with the trade. That's number 1. Number 2, the 5-minute hasn't finished the crossover yet. We haven't finished this crossover. Right here at this time where it's telling us to take the trade right now, take the trade. No, we haven't finished the crossover. That's another weakness. So with all this being said, if you were really on your, if you were really reading it and you were present and you saw this stuff, you'd say, yeah, I'm going to take profit a little bit quicker. I'm not going to wait for the 1-to-1. I'm going to wait for a 2-to-1. Maybe I'll do halfway. So here's the full. No, we're going to take half. Half is about right here. Boom, we get the win. That was the 5th and final occurrence of the day of this strategy. The rest of the day, as I was about to explain, look what happens. We've flipped to the upside now with the 30-minute. That means we should be playing to the upside. That's where our focus should be, right? That's what this means with this strategy. But do you see a moment where this is... No, the rest of the day, this is not supporting an upward trade. Even if the histogram MACD right here is going upward a little bit, that doesn't matter because this is going down. We want it all to be aligned. We want a full alignment out of the 5-minute chart. So there was no more trades the rest of the day with this particular strategy. There was 5 setups, 5 occurrences, win rate of 100%. Or you could say win rate of 80% because this final one right here that we talked about, to achieve a win on that one, you would need to know there's risk variables, there's weaknesses in this one, so we're going to take a smaller profit. We're going to take a 2-to-1 rather than a 1-to-1. When risk when the risk is high, decrease the profit target. Decrease your profit target, take profits quicker, don't stay in long, follow your stop loss. So this was a recap of 11.18. I hope you're doing well. I'll see you in the next one.